Hey guys, welcome back to the channel. Today we're going to talk about balancing win rate and risk reward. But before we get started, I want to remind you that on October 24th, we're kicking off a 4-day online trading workshop, 100% free, called the Cyber Trader. I've been teasing you guys about it. The link is officially up. I'll put it underneath the description box below, but make sure you sign up, reserve your seat, mark your calendars, and I'll see you guys for 4 amazing days of trading education for free. Now, if you are able to shoot for higher levels, once again, you've got some really good candlestick combination, right? You can look at these things one by one, right? High momentum, doji, right? Then we followed up with a lower low, lower close, right? So this is a strong bearish candle. So, hey, maybe we're back in business. And then you get another doji candle. Then you get another doji candle. You get a higher high, higher close right here. This green candle, it's a positive candle. Then you get this candle, which is a tricky one, where it spikes down. It's like a kind of a kiss of death, one last spike, and then closes above. This is a really powerful candle right here. And then again, you just notice the trend of where are the tails at on these candles. Are they to the upside or to the downside? And the fact that they're to the downside keeps telling you that bears are trying to push down and bulls keep pushing them up. Bears are trying to push down, bulls keep pushing them up. Where would be the next opportunity to look for? Well, a few levels stand out for me, and we'll see if volume kind of helps out with that. But one is right here. Again, the consolidation before the big candle. 2 is right here. And why do you think I picked this level, right? Doji candle in here. I guess we can kind of take it all the way up to here if we want. And then 3 would be the very highs. So a few things I can do. I can take my Fibonacci retracement tool and say swing high to swing low. Well, we got some 3D2 confluence right at level 1. We've got 6 with 8 and 50% at level 2, right? Let's bring some volume in. And I'm going to take it from the inside here just so we can get all this junk in the inside as well. And let's just see if one level stands out amongst the rest. Boom. Certainly does, right? Now we can see we have voids here, and then we increase a little bit here. So the levels that we chose are pretty spot on. They're all, maybe the top one not so much, but they're pretty high levels of volume. So if you're someone that is shooting for the higher level of structure, and this is kind of setting up your trade. We talked about having multiple ways to attack a trade yesterday. This is where it comes in handy. If you're someone that's setting up for this level, and let's say you wanted to buy at market, you can probably find a way to make this work risk reward wise, right? Again, I'm not saying you should buy at market, but you could, right? If you could buy at market and say, hey, I'm still going to be able to have my risk meet my profile, my ATR, if I'm doing an ATR stop, ATR is 27. Even if I still want to get under the lows here by 27, which is going to be a fair amount, 62, 87. So that's going to be 50, 60, 70, 60. 60s pretty much. Even if I want to get under this level by a fair amount, my risk reward is going to be about right here. And I can still get a 1-to-1. So like this is, again, maybe not the ideal place to take a trade, but just for an example purpose, right? This is a trade that could still work. Now, what if you're someone that's shooting for this level? Oh, hell no. All right, so you know an at-market order is out of the question. So what is something else that you can do? Well, let's go to my second chance entry. What if we were to come back in double bottom and maybe give me an entry around here, right? Where our stop doesn't really change. It's still an ATR below the low. We already adjusted our target to the quickest area or the closest area. The only thing that would change is my entry, which would now be down here. And now I have a risk reward that works in my favor. Again, we don't know where this is going to enter, but we're kind of playing it out in our head. But if you have multiple ways to enter a trade, you can still look at these scenarios and you can create a way that works for you. And you can say, you know what? Here's where I want to take my target. Here's how I can get involved in the trade. And the key is this, right? We know that there are 3 main parts of a trade, right? There are entries, there are stops, and there are targets, right? 2 of these things are going to be more important than the other. What do you think those two things are? Two of these, in my opinion, should be non-negotiables. For me, it's your stop, first and foremost. You never want to adjust your stop to make a trade work, right? Because you never want to take on more risk than you need. You never want to put a stop loss in a position that is unsafe, because then there's no point of a stop loss, right? That's like putting a broken parachute in your bag, and it's like, well, okay, well, what's the point of putting in a broken parachute? There's no point, right? So stop shouldn't be adjusted, in my opinion. I'm not talking about like active trade management. I'm talking about like adjusted to make a trade work, in quotes, right? Targets shouldn't be adjusted either, because again, targets should be set at the place that you think price is likely to go. Why would you move targets to a place that you don't think price is likely to go? Does that make any sense in the world? No. So why would you adjust targets to make a risk reward work if you're putting them in a place that you don't think is going to get hit? It makes no sense, right? So targets, yep, Adam's right. Targets and stops should be the same, right? So this should always be the same based on your rules. This should always be the same based on your prediction. So those two things can't change. So you never want to mess with those things to make a risk profile work. You never want to say, oh, I'm going to take targets a little bit longer so I have a 1-to-1. Nope. Ooh, I'm going to make stops a little bit shorter so I have that 1-to-1. Nope. But what can change is your entry. Just like we spoke about, what you can do is say, hey, you know what? I would love to enter here, higher high, higher close, but I can't because this risk reward doesn't work. So scratch that initial way, that first strike entry. What other reasons or what other ways can I get involved in the market? Okay, well, if I can't get involved in my higher high, higher close, which is my ideal entry because I'm late to the trade, then I look for a double bottom. And then maybe that double bottom gives you a reason. And then if double bottom doesn't work, then you look for the third one. And you do that until you exhaust your options. Usually there's 2 or 3 options. Then you just move on to the next pair. But we don't want to make adjustments to the other things, because those are the things that are going to sabotage our trading. And those are the things that get a lot of traders in trouble, because they do stuff like that. We're like, you know, I'm a little bit late to the party, but I'm going to get in anyway. And then they do a trade like this. And maybe they win, right? And they win a little bit. Whoop-de-doo. But when they lose, now all of a sudden they lose disproportionately. And think about it like this. If you consistently do this, and we know we just don't make mistakes once, right? One mistake, especially if we keep doing that mistake and getting positively rewarded for it with a win, we do it again. Think about if you were to take this trade 100 times. 100 times. And if you're a 55% trader, you win 55% of the time, which is a good win percentage, by the way. You're going to lose money, right? So do you really want to make this a consistent habit? No, because your wins are not outweighing your losses, and you're not winning at a clip that is great enough to say, hey, I can be a consistently profitable trader with an under 50% or with a negative risk reward. Because we've all seen the chart, right? We've all seen the chart. You can be a very successful trader with a less than 1-to-1 risk reward. See if I can bring it up for you guys. You can be a very successful trader with a less than 1-to-1 risk reward. But in order to do that, you have to have a very high win percentage. I'm almost there, trust me. You have to have a very high win percentage. Where are you at here? And if you don't have that very high win percentage, what am I looking for? Infographics, there we go. If you don't have that very high win percentage, then you're not going to make the balance work, right? You could have a 0.5-to-1 risk reward. If you win 33% of the time, you'll be profitable, 50%. You got to be above 66% to be profitable. If you have a 1-to-1, you have to be above 50% to be profitable. If you have a 2-to-1, you can win 33% of the time and be break even, right? So look at those comparisons and understand what you need to be. And if you're someone that's sneaking into positions that you shouldn't be in, and you know that, hey, I'm only winning at 50% clip, that 0.5 to 1 risk, that's not going to cut it. Right? 50%, 0.5 to 1, you're in the red. 50%, 0.9 to 1, you're in the red. You have to be above 1 to 1 consistently to have any chance at being in the green. You have to. But we don't think that far forward. We think about the individual trade and we tell ourselves, I'm just going to do it this one time. That's what we always say, right? That's what we always say. And before you know it happens. Boom. Hope you enjoyed the video. Do me a favor, hit that like button before you leave. If you're not subscribed already, do me a favor, hit that subscribe button. Also, if you have any questions or comments, feel free to leave them below. Lastly, just a reminder, the 4-day free online trading workshop called CyberTrader is kicking off October 24th. You can register now. There is a link in the description box below, or at least mark your calendars. That way you don't miss it. If you're watching this on mobile or on the road somewhere, you don't have a chance to click that button. But make sure you put it down. You don't want to miss it. We haven't done this in about 3 years, so it is going to be massive.